Good morning. Welcome to Trading Hour. It's a Wednesday morning. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Hormuz Fatakia. And markets are fluctuating between modest gains and modest losses. But in the last 10 minutes, I think there was a bit of a pickup. At about 10:30, 10:45, when I was walking up, the markets were down. Banks were, the Nifty banking index was down close to about 0.5%. So there has been a bit of a recovery if you pull up that intraday chart. But again, not much to show in terms of the index, in terms of moves. There you have it. A little bit of a spike. But lots of stocks are moving around. For starters, banks are dragging. The Nifty PSU banking index is under deep pressure. And in terms of individual financial names, Bajaj Finance, in fact, the Bajaj twins, but Bajaj Finance in particular has cut the guidance on the return on assets, which basically indicates that the company expects some impact on profitability, some pressure on profitability, and they may be looking to introduce lower ROA products. So Bajaj Finance ROA guidance cut has disappointed the street. IndusInd Bank is the other one. For starters, it had a massive 40% rally, but MK today has downgraded the stock to a reduce, and they say the CEO resignation derails hopes of a smooth turnaround. And SBI, that's the other laggard in the banking space, board meet on Saturday where they will consider results and some fundraise. Trent is losing ground. Remember here, valuations are very expensive, 70 times forward FY27 PE. On the gainers list, you've got a BPCL post numbers, Power Grid, HDFC Bank in the banking pack is holding up in the green. And not to forget, today is the Nifty weekly options expiry.
The index has been taking a back seat for the last couple of days, and there has been a lot of stock-specific activity that's been going on.
Actually, yesterday and today, because Monday was a good session. Monday, we were up more than 1%.
You're going into a holiday as well. There is a lot of global macro data that is lined up that we'll now be reacting to on Friday. So we'll have to digest 2 days of global cues as well, and very heavy ones at that. So we keep an eye out on all of them. And of course, as Reema was highlighting, a lot of stock-specific activity. Some good earnings reactions. Vishal Megamart is now the top gainer on the Nifty 500, 10% higher on the stock. There have been multiple blocks that have also taken place on the stock at around 116 rupees a share at an average price, that is. So 9.5% higher on Vishal Megamart, and CEAT 2 is now trading 7% higher. And the good commentary, the good management commentary from CEAT is rubbing off on the other tire stocks as well. Say the likes of JK Tires, that's up 3.5%. For the likes of Balkrishna Industries, that too is up around 3% in today's trading session. What's coming off slightly is defense as a theme, and they are seeing some profit booking after the stocks had seen a massive run up over the last 2 trading sessions. So a lot of these defense names are seeing a bit of a cool off in today's session. Hindustan Aeronautics is down a couple of percentage points. BEL is down around 0.5%. Pull up Paras Defense, that's the one that needs to be kept an eye out for, because the stock was up 30% in the last 2 trading sessions. Masgadoc is already...
And today, by the way, Paras Defense reporting
results as well, but that is continuing to move from another 5.5% on Paras Defense as well. So defense is recovering from the lows, but otherwise it's a very stock specific market so far.
Oh, indeed. Let's straight away get to the first corporate then we have on the show. Jana Small Finance Bank is on our radar. The company's Q4 profit has declined by 61% on a year-on-year basis. The net interest margins declined both quarter-on-quarter and on a year-on-year basis. We have with us Ajay Kanwal, Managing Director and CEO of Jana Small Finance Bank, on the show now. Thank you very much, sir, for joining in. If you could give us some indication of how you expect FY26 to pan out in terms of growth, in terms of margins, and even the asset quality. What do you anticipate?
So first, a very good morning to you, Reema and Hormuz. I would like to start with a request that you please change the reporting on the Q4 and the year. And my submission to both of you would be that take away the deferred tax asset out of the year-on-year performance.
Okay.
Because the deferred tax asset doesn't tell you how the institution is performing. So it tends to mislead folks, which is what you're showing on the screen, which is fall of 61%. And deferred tax asset goes with what we've been carrying from the past. And so I'll give you a simple number. Between the 2 quarters, DTA in Q4 last year was 155. So it was adding to the profits by 155 crores. Deferred tax asset this year is 28 crores. So you see just 4 crores for the quarter. So it's a 151 crore difference in deferred tax asset between Q4 last year and Q4 this year. If you just add that back, the profit is positive. So that's the first most important thing. The second most important thing for everybody who's following that is we have accelerated provisions. The reason we have accelerated provisions is purely because we would like to keep our net NPA below 1%, gross NPA below 3%. and that allows us to apply for the universal bank. The criteria for universal bank application is 2 years in a row we have to be 3% and 1%, below 3 and below 1. And to meet that criteria, we have to accelerate some of our provisioning, which is also what we have done both in the quarter 4 and the year. So I'll just give you the other number on accelerated provision, which is very important to hear. This year, we have done accelerated provision of nearly 305 crores, over and above our PAT. So my first submission to both of you and to the analysts who are helping write these headlines, that it will be probably better if you just look at these two aspects and then do the reporting, because if you just report fallen 61%, then the people who don't really go into the details, which they expect that you all will not be getting a good picture or probably the correct picture.
So we got that point. We look at the profits X of the deferred tax assets. But can we focus on some of the other, what you expect in terms of growth and even in terms of net interest margins? Because we've seen a sequential decline and a year-on-year decline there.
So, Rima, growth this year was 19% on the asset side. We have guided that we'll do 20% on the asset side next year. But let me tell you the most important part. This year, our growth in secured assets was 40% year-on-year. We had a decline in the unsecured book, which was largely MFI, by minus 11%. So I really want to say this again. We grew 40% secured asset, minus 11% on unsecured. For this financial year, we'll do literally similar. We don't expect a decline in unsecured assets anymore because the worst is over. But we do expect a very healthy 30% plus growth in secured. So we will grow assets by 20%. On the deposit side, this year we have grown 29%, CASA at 18%, retail at 19%, and the rest is bulk growth. So we have had a very strong deposit growth this year. Our surplus cash is about 2,800 crores on our books on 31st of March. So yes, we should see very strong asset and deposit growth this year. Focus areas will be secured assets. Focus area will be CASA and retail deposits. On net interest margin, we have declined to 7.7%. And like I mentioned, we have had a negative growth on our unsecured book, which is largely MFI, which has caused a decline. So the MFI book doesn't decline this year, which it should not, or grows even slightly positive. NIMs will improve. Cost of deposit will get better this year. As you know, there was stress in MFI last year. So interest and suspense should be less this year. So if we take a combination of all three, our NIM should get better this year. Also, I must add, every passing year, our secured book is growing. So the number is March 24, we were 60% secured. March 25, we are 70% secured. So yes, as we grow more and more secured, NIMs will start compressing. But the compression this year is largely due to negative MFI growth, which should get, a lot of it should come pull back during this year.
Mr. Kanwal, good morning. Thank you for joining in. So 70% by secured by in FY25, so 80% secured by FY26?
Almost I wish. But as you know, as our balance sheet now is roughly about 30,000 crores in assets. Every percentage point is difficult to move. Last year was a bit more sweeter because of the negative minus 11% growth on microfinance, which is not what we normally do. We normally grow by 1% or 2%. So if you take our microfinance to...
We seem to have a patchy line there. Mr. Kanwal, please finish your point, sir. We just had a patchy line with you.
Sorry, what I said is it will not become 80 so fast because the size is much bigger of the balance sheet. Also, this year we had a minus 11% of microfinance, which we don't anticipate this year. So yeah, expecting between 73, 74, 75%, that should be the range where we will finish secured.
So the worst of the MFI's stress is over, is what you're saying. So would that stay in FY26, saying that the worst is over, or would you start see things turning for the better in this segment that has seen a lot of stress over the last 12 to 15 months?
So I think for the better, I would probably put in second half next year. Purely because we had some blip coming across the industry from Karnataka. So we have a few geographical pockets which, don't seem to be, wasn't a problem in the past, seems to be indicating some challenge. So I would think that, listen, hard work continues, at least for the first half. Good news is in quarter 4, our microfinance book has actually grown by 0.2%. Now, I'll tell you what growth means for us. It doesn't mean the book is growing and the profit. That's all secondary. Primary is my collections people who are responsible for giving more sales are feeling comfortable doing sales, which is why my book is growing. That means the last mile Jana employee who's in touch with clients is now comfortable to grow. That is a most positive sign you should see. And which is why we are very enthused that yes, microfinance will have a much better year than last year. But would I take my eye off the ball? Am I very comfortable? Am I doing 99%? No, we are still at 98.5, 98.6. I just need the last bit to come in. Then I'll be a lot more comfortable.
What about asset quality? You managed to bring down your gross NPA in the March quarter to 2.71%. Does the downward trend continue?
So listen, our asset quality primary driver from, we were lower last year. It became a bit more deteriorated primarily for microfinance. So as microfinance changes, we will obviously get better this year. Second, I must tell you is that the secured assets are very predictable and very clear in how they operate and what to expect. So I would suspect that yes, our gross NPA and net NPA should be on a better trend this year too.
Have a number in mind? Do you think it can head down to say 2.5?
We'll try as hard as we can. I don't want to commit a number because, I'm a bit more like, let's watch MFI for first half, but I'm sure we'll catch up again. And then I'll tell you more of it. I only have one request, and I'm sorry being repetitive. This fall 61%. Every time I see it, I feel very bothered. Please have someone have a look at it.
Yeah.
Sure, Mr. Kanwal, thank you so much for sparing time and joining us today. Wish you good luck for
Thank you so much
the full FY26. That was the management there of Jana Small Finance Bank. And the stock, though, recovering from the lows of the day. We'll take a short break. Up next, we'll discuss what's buzzing in the commodity space. Manisha Gupta joins in. Stay tuned. Welcome back. Flat as flat can be on the index, but the focus is on specific stocks, and that is where the actual action lies. Westlife Foodworld is now down 5%. KFin Tech is down 5%. JSW Holdings is down 3.5%. And a lot of the other movers in today's session, Tejas Networks is down 3%. BSC is down 3% in today's session. Also, just pull up Samvardhana Motherson and to check if there has been a reaction with news just breaking a couple of minutes earlier about Volkswagen's first quarter numbers that have seen a 37% drop in profitability for the first quarter. Samvardhana Motherson down around 1.5%, one of the key suppliers to the company there. And almost all of the other auto names as well, Rima, they have been affected because there was a lot of anticipation that there might be some relief on the auto tariff front, and the executive order that Donald Trump signed last evening does not provide that kind of relief as was anticipated because the tariffs still stay.
25%.
And they still stay, and instead of simplifying the process, it just complicates it because it involves rebate and reimbursements and a lot of other things, and has a lot of moving parts to it. So no such relief for auto companies, and it's showing up on names like Tata Motors as well, because Tata Motors too is down around about 3% in today's trading session, as are some of the other auto names as well, barring tire stocks. Of course, Tata Motors at the lowest point of the day down around 3%. But shifting focus now to the commodity space, and Manisha Gupta is joining in on the auspicious occasion of Akshaya Tritiya. Manisha, good morning.
Well, thank you for that, Hormuz. And it is believed that if you buy gold today, it will never give you a loss going forward. It hasn't actually given you a loss ever in the last 20, 25 years, or the history shows that it clearly has kept up with the inflation and continues to be a very strong safe haven as well. So, usually this is what I've got as numbers from the industry, that usually that you see sales on Akshaya Tritiya is anywhere between 18 to 20 tons. But now, because the prices are so expensive, the markets anticipate that 12 to 15 tons of a sale on Akshaya Tritiya, that's today, is what you perhaps could see. This is what we've seen in sense of Akshaya Tritiya prices over the years. So as you can see, we've clearly doubled from where we were in 2022. And in the last 1 year, we've seen 25,000 rupees per 10 grams of a surge coming in for the gold prices. We also did see 1 lakh rupees, 10 grams coming in the month of April for the gold prices there. And it's not just gold. When you look at silver, and that is another thing that is perhaps being bought on Akshaya Tritiya, As you can see, the last few years have played anywhere between 60s to 70,000 in cents of a kg for silver. But last year, we've seen higher highs come in. And this year, we've seen a lakh rupees a kg come in for the silver prices also. This was somewhere in the month of March there. So very strong gains is what we are dealing with in sense of gold and silver since the last year, or last Akshaya Tritiya, that is. So when you look at the numbers, they have been quite on the stronger side there. Where there are various gold buying options, and majority, 60 to 65% people still buy it in physical, in sense of jewelry, bars and coins. But when you look at financialization of gold, gold ETFs, mutual funds, even digital gold seems to be doing quite well right now. And one of the major reasons that you have seen gold prices gain in this year because of the tariff concerns and also inflation concerns as well. This is the data for last 3 years. While this year we are up by 27% in case of gold prices, we've seen prices gain up by 28% in the last year and 15% in 23 as well. So it has been a good going. Global central bank buying has been the major reason that you have seen the prices sustain on the higher side. So 1,082 tons was an all-time high buying by global central banks in 2022, but they have kept it above 1,000 tons for the last couple of years as well. And this year, while the month of Jana and Feb has seen 44 tons, but the belief is that you could be looking at 800 to 1,000 tons being bought by global central banks in this year as well. So while the support comes in from central banks, ETF buying and trade tensions, the markets do believe that the kind of highs that we have seen in gold are kind of going to sustain on the higher side. I want to talk about the gold price outlook, and Bank of America, for one, expects the 33.50 would be an average price for this year. You also have statements coming in from Deutsche Bank, ANZ talking about levels of 3,600, 3,700 by the end of this year. And then it is about JP Morgan, which says that the gold prices could surpass $4,000 an ounce as well. That is by the year 2029. And that's exactly the kind of outlook that we have coming in from BGS, John Paulson, which believe that the next 3 to 4 years are going to be very, very bullish for the gold prices. Some correction in the near term, of course, could be seen, but the longer term still continues very strong. Well, we are joined by Khushbu Ranawat. She's chairperson, Western Region at GJPC. Khushbu, hi. A very happy Akshaya Tritiya to you. And the way the gold prices clearly have been moving makes for a very strong case for investment from where we stand right now. What is your sense on this Akshaya Tritiya? What kind of a buying are we anticipating for the Indian markets and, of course, for the international diaspora?
So gold has definitely proved to be reliable throughout. It's increasing, and people are loving the sentiments. But it's become a sudden increase. So there's a tightness, what money can the customers pull in. But what we're really glad about is our retailers. They're really focusing on the strategies, how they can pull in the customers, how they can encourage customers to invest in gold. So yes, we should all be out there buying gold.
Oh, well, absolutely. Khushbu, with the way the prices are, almost a lakh rupees at 10 grams, what is it exactly that the consumers are buying, and what kind of footfalls are you anticipating in sense of a percentage increase or even a decline as compared to last year?
Fingers crossed, gold is high, but there will be a trend in lightweight jewelry, millennium collections, and people will keep buying, yes, because gold is there to stay. And looking at the situations globally, it's not going down because all the economies of the world have reserves in gold.
Khushbu, what's your sense on exports this time around? I mean, does the Indian diaspora outside also believe in Akshaya Tritiya? Do you see those buyings coming in as well?
That's a little bit sentimental right now due to the tensions between Trump and China. But hopefully, if that goes down in a few weeks, there will be a big pull-in for sure.
You talked about lightweight jewelry, which really seems to be doing well right now. Is it also about light caratages? Is diamond doing better? Is studded jewelry doing better? Or are people buying more coins and bars?
Akshaya Tritiya is definitely more about coins and bars, but we have seen a rising trend in natural diamond jewelry now also. So hopefully everything will do, all the commodities will do very well this Akshaya Tritiya.
Khushbu, do you also see a spillover on silver, or do you think gold it is?
Silver also, yes. Silver also, yes.
Any number that you're willing to put out on what kind of tonnages or what kind of a percentage would we see in sense of sales? Because I was talking to a lot of people and they said 20 tons thereabout average is what we sell on Akshaya Tritiya. With the way the prices are on where they are, what's your sense?
Hopefully we'll reach the same mark. 20 tons it is.
Khushbu, any sense on prices that you have going forward?
No, No, I don't think it's going to rise more. Hopefully, we see some correction soon. So that will be nice, but not too dip and not too high also. It'll be pretty much stagnant now.
Khushbu, also, it really seems to be turning into a long weekend with a holiday tomorrow. So are you anticipating the Akshaya Tritiya spillover tomorrow and then towards the weekend?
Yes, could be, yes.
A final question then, Khushbu. How long are you working today? Because I spoke to some jewelers and they said they've opened their shops from 6:30 a.m., would continue until perhaps midnight or 1 a.m. as well. What really is the sense that you're getting in from various DJPC members and jewelers community?
Yes, a lot of our retailers in the south, a lot of the retailers in Maharashtra have also opened their shops very early. So hopefully we'll soon see a lot of pictures of the long lines waiting for them.
We need shops to be open for longer, right? Because we are sitting here in the studio and we'll be here.
Now we buying is the question.
Oh, yeah, that's a more pertinent question too. But Khushbu, thanks a lot for joining in. Manisha, thank you for stepping in as well. We take a short break. The index still remains flat, as absolutely on the flat line. But Praj Industries, though, is at the lowest point of the day now, 6.5% lower, and an earnings reaction there as well. We take a short break. We come back with market technicals and trading ideas with Mitesh Thakkar. Stay tuned.
Welcome back. You're watching Trading Hour, and Vamakshi is now joining in to talk about the rise, the surge seen in Vishal Mega Mart post their numbers, and the decline seen in Praj Industries. Vamakshi.
Well, Reema, let me first start off with Praj Industries. A weak set overall coming in from the company. When we look at the numbers, it's a miss across the board. The revenue has declined by 16%. The employee expenses as well as the other expenses, on the other hand, saw an uptick of almost 17%. Resultantly, the EBITDA margin was under a fair bit of pressure. Even in fact, the EBITDA margin declined by almost 424 basis points, and this could likely be on account of scale-up related expenses of Praj GenX manufacturing facility, wherein they incurred a loss on the PBT level of somewhere around 80 crores. The net profit, on the other hand, also saw a very sharp fall of almost 60%. The ordering activity, on the other hand, was good. Order intake saw an uptick of 11.7%, and the order book stood at 4,293 crores, an uptick of almost 11.3%. So therefore, it's largely an execution-led miss this time around for Praj Industries. In fact, the management also joined us, and they said that they're expecting 10% revenue growth, double-digit margins going into FY26. They're maintaining their 2030 targets, 10,000 crores of revenue, 50% from bioenergy and 50% from the other segments. And they also said that Praj GenX received approval from international customers and they will start booking orders in FY26. But overall, it's a dismal performance from Praj Industries as compared to analyst estimates, and therefore the stock is down and out in trade. But on the flip side, when we look at Vishal Mega Mart, it's a completely different story. Revenue is up nearly 23%. The margins have improved to almost 14% from 12.1%, and the net profit has seen a very sharp surge, up nearly 88%. As far as internals are concerned, same-store sales growth stood at 13.7%. Revenue from own brands was at 73%, so higher share coming in from there. Sales from apparel also saw good uptick, and the gross margins too improved to 28.3%. So good results for Vishal Mega Mart. Resultantly, the stock is higher today.
So stock is doing well for itself, among the top gainers on the Nifty 500, 8.5% higher for Vishal Mega Mart, and one of the highest price targets for the stock is at 161, and that's, I guess, from Morgan Stanley. So good going for Vishal Mega Mart. The other pocket, though, that is having some mixed trends, with some stocks doing well and some not so, is the real estate stocks, and with Prestige Estates extending its gains from yesterday's trading session. After that CLSA report, and now the official announcement of the foray into the NCR market as well. Rhea is here with more details on that. Rhea.
Well, yes, a lot of real estate stocks are in focus once again today. First up, we have Prestige Estates, since they have announced their entry into the NCR residential market with the launch of the first phase of their project in Indirapuram. Now, the first phase of this project has a GDV of over rupees 9,000 crores, and once the second phase is launched, the GDV for the total project is going to reach rupees 12,000 crores. So this is a big launch for Prestige Estates. Now, on the back of this, Morgan Stanley has upgraded the stock to an equal middle way trading with their target price actually being cut to rupees 1,370 per share. They've said that the worst is behind for the stock, and the recent RERA approval for the Indirapuram project could result in strong pre-sales in Q1 and Q2 of FY26. CLSA also yesterday they had maintained the outperform rating on the stock, target price of rupees 2,380, saying that they believe that this launch will lay the foundation for strong pre-sales in Q1 and 2 of FY26, and it will also allay concerns over the miss on its FY25 pre-sales guidance. Now remember, the company had only achieved rupees 17,000 crores versus their guidance of rupees 25,000 crores for pre-sales in FY25, and the approval delay for this Indirapuram project was the key reason for the miss in this guidance. And CLSA has also said that they believe that the company can sell up to 60 to 70% of this project in FY26 itself. Now some other real estate stocks are also buzzing away in trade today, and this is on the back of commentary from Oberoi Realty's management in yesterday's earnings call. Oberoi Realty management has said that the luxury segment is agnostic to the economy, and they don't see any slowdown at all in the luxury segment, and that there is a large appetite, and the consumption per person per square foot has also gone up substantially. So they are seeing no slowdown in the luxury market, and on the back of this, we have Godrej Properties, Macrotech, DLF and Phoenix Mills trading around 2.5 to 6% higher today, with Macrotech and Godrej Properties being the big gainers. Now, there has also been some negative commentary from Oberoi Realty in the earnings call yesterday. The management said that the next quarter won't see any launches because of the monsoons, and all of the launches are lined up in H2 of FY26 as demand will pick up in the festive season. So a bit of a negative view for Oberoi Realty, and the stock is still trading slightly in the green.
Thank you very much for that. Mitesh is now with us for a quick technical check on the markets. Mitesh, things are very quiet on the benchmark, just like yesterday. But the Nifty Bank continues with its weakness, 230 points lower. What have you made of the trade?
So my understanding is that we are possibly looking at some kind of consolidation. The lower bound was established on Friday when we got a dip around 23,850. There is also a pivot at 24,000, so I don't know which one is correct, but I think my broad understanding is that on the upside, 24,500 is the upper end of the range. They will take a few points, and on the downside, it's either 24,000 or 23,850. So broadly, I think the market might just be sideways in this kind of range. Having said that, the stock calls that I have are both, tire stocks, Balkrishna and Apollo. Balkrishna is a buy with a stop at 26.35 for targets of 27.70. And Apollo Tires is the other one which I like. That's a buy with a stop at about 4.62 for targets of 4.85.
Mitesh, what about some of these earnings reactions as well, right? There's the extreme earnings reactions that you're seeing. Bajaj Finance in particular is down 5.5 now. What are the charts indicating here? You'd use this dip to buy now at 8,600?
See, Bajaj Finance has had a very good rally from levels of around 6,800 to about 9,600. And now I think it's going through some kind of first level of correction of profitability. I would wait for slightly lower levels. Preferred levels on the entry would be around 8,300 or 8,250. So another 200-300 points you might want to look into the stock.
All right, Mitesh, thank you so much for sparing time and joining us today with your views on the index and on specific stocks as well. Take a short break and discuss market fundamentals on the other side with Jyotivardhan Jaipuria of Valentis Advisors. Stay tuned. Welcome back. And the Bajaj Finance twins are the big casualty of today's trading session on the Nifty, at least. Both of them down 5.5 to 6.5%. Be it Bajaj Finance or Bajaj Finserv in reaction to the results. And no comfort whatsoever provided by the bonus issue, the stock split, the dividend from Bajaj Finance. So no bottom fishing at all. Both of them still at the lowest point of the day. Abhishek is here with more details on that. Abhishek.
Well, both Bajaj Finance and Bajaj Finserv reported the numbers yesterday. Bajaj Finance, the NI and PAT were a tad below our poll. However, the FY26 guidance is on the weaker side, and that's what spooked the investors in trade today. So take a look at the customer addition. It's expected to be at 14 to 16 million in FY26 versus 18.2 million that they have done in FY25. The AUM growth guidance has been lowered down to 24 to 25% from the earlier long-term range guidance of 25 to to 27%. Net interest margin to remain stable as they expect the cost of funds to improve by 10 to 15 basis points in FY26. Fees and charges that will grow at lower than AUM growth of 13 to 15% in FY26. Credit cost to be in the range of 1.85 to 1.95%. Remember that, in the previous year, they have got credit cost of nearly 2% higher than their guidance as well. And this time around, 1.95% continues to remain on the higher side as well. So return ratios have been lowered down with respect to expectation for FY26. ROA guidance has been cut down to 4.4 to 4.6 versus 4.6 to 4.8% earlier. ROE guidance has been cut down to 19 to 20% from the earlier guidance of 21 to 23%. With reference to Bajaj Finance, the general insurance reported a weak show. Total premium over there was down about 9.65% YOY and 27% sequentially. In that, the gross written premium was down 13% YOY and more than 34.5% sequentially. With respect to the claim ratio in the general insurance, that saw massive improvement to 62.9% versus 70.3% on a year-on-year basis and 77.7% on a sequential basis. The PAT was down over there 4.5% on a YOY basis and about 9.25% on a sequential basis. With reference to the life insurance, that reported a good show. The income over there has increased massively on a sequential basis. However, the PAT was down both YOY and quarter-on-quarter. Back to you.
Abhishek, thanks a lot for that. And taking this conversation forward, we've been joined by Jyotivardhan Jaipuria from Vedanta Advisors. And Jyotivardhan, good morning. Thank you for joining in. There has been a lot of this stock-specific earnings reactions that we are seeing. We'll get to individual names as well. But starting off with the Bajaj twins, right? Bajaj Finance, Bajaj Finserv, both. The street has become so used to them reporting growth in the high 20s that even a moderate guidance cut has left them disappointed to such an extent. What do you make of this now? Do you use this as an opportunity to accumulate names like Bajaj Finance, or would you wait and see for things to normalize first and then take action?
Yeah, so in general, what I'll say is that a lot of stocks where valuations are high, there the margin of safety is very low, the margin for error is very low. And when you have that sort of valuation, what tends to happen is people are always building in a very optimistic scenario. So anytime where the optimistic scenario is not so optimistic also, it still looks good, but it's not as optimistic as people thought, then market tends to go down. The other is, you've seen a fairly good rally if you've seen the markets in general over the last few weeks. So to that extent, anywhere where you've seen a rally coming, I think in general, we'll see some consolidation happening. So a lot of times you may see earnings doing well, but the stock correcting because, the stock had run up already in anticipation of good earnings.
Jyoti, hi, morning. So what has been your approach to trade? We've seen a lot of the not volatility, but the markets have recovered considerably. They've snapped back up. And trade tensions to some extent have thawed. Even the global markets have recovered. I think it's been up now, 5-6 days in a row, and the Nasdaq is back to the levels that it was on April 2nd. So what's the call on the markets now?
Yeah, Rima, so, I guess what we've seen is after that April 2nd, when we had these massive reciprocal tariffs, to some extent, I would think that, the Trump administration is going back, getting a little easier on these tariffs. Because if you see even probably a fourth of China's imports have got duty-free, all the electronics and that sort of stuff. The noise from there is always been more positive in the last few days, saying this China tariffs are not sustainable, a deal will happen. We're going to do a deal with many more countries very soon. So it seems like, they're getting a bit more relaxed on it. They figured that what they did was probably the extreme position and that was like a bargaining tool. But that's not what they can really sustain. They want to get back to more normalized scenario. So I think the market's taking cue from that, saying that, we've seen the worst of tariff play out. And that is the reason markets everywhere is corrected. From where, we've corrected and where we've rallied to now, we've probably seen a 10% sort of rally from the lows. I think we are probably due for a bit of consolidation now, where markets will hang around waiting for the next really positive news to come. Probably in India, the specific concern is this whole border situation and how it plays out. Because our views, it probably will not be a long drawn out battle, but probably some very short strikes which we'll have. But markets are a little concerned about that. But I think the general thought is probably it's going to be a very short and swift surgical strike and nothing very major.
Sticking to that tariffs bit, Jyoti, what do you do with these tariff-related sectors now, considering all the uncertainty that's around them? There is still no clarity on how much or whether there will be tariffs on pharma. There is now some clarity emerging that the 25% tariffs on auto imports will stay, and there has been some back and forth here with regards to auto parts as well. What do you do with both autos as well as pharma? For autos, at least, there is also no help from domestic demand either. So what about these two sectors?
Yeah, so, in general, what we had done with autos is, our whole auto exposure was in auto ancillaries, which don't have export component. So this was even before the tariff, because our view was that, the international scenario is not looking great. So we don't want to get too much into companies which are very dependent on the international demand. So the domestic companies are fine. Where we'll see is there'll be some slowdown coming in the whole, OEM space. So, if you're looking at auto ancillaries, which either, got new products which they have just entered into, so that helps ensure demand, even if, the overall OEM demand doesn't grow, or they are diversifying into some newer markets. Those are the things which we have been really focusing on. So we are comfortable with the auto ancillary exposure, but, most of these are not geared to US. Pharma is the other sector where we are very overweight, and we have exposure to the US generic pharma. So far, we have not trimmed any of that. In fact, we've been like very steady over there in pharma. Our call is that, even if the tariffs come, and we don't even know where it's coming because it's been all over the place. Tariffs are coming, not coming. Then he said in 1-2 months it will come. But just now the move doesn't seem to be like tariffs are coming. Even if it comes, the generic sales to US are quite high. And the way the margin profile is, I don't think, Indians can absorb too much of that tariff increase. So ultimately, it will be passed on to the consumer. And that's where I think we'll get some relief coming, because once medicine prices go up in the US, then we'll probably see some rollback of the tariff. Hopefully, but before that comes, because India is already talking to US, and I think all the statements coming from there are India is probably going to be one of the few countries who will do an early trade pact with them. So hopefully, as part of that, Indian generic pharma exports will get a favorable treatment from the US.
Jyoti, you also added your exposure to a chemical company in the quarter gone by, given the sharp fall in the stock price and expected recovery. With the appropriate disclosure, you want to tell us which company is this and what made you like it?
So, without getting into names, essentially for us, it was like a company which is into exports. So in general, if you look at the chemical market, what happened in the last 18 months was it was getting dragged down because there was a destocking at the dealer level. Demand was weak, plus the destocking was happening, so the demand environment got even weaker. So our sense is that the dealer inventory levels are very low now. And with that, you probably are starting to see volume growth, which is in line with what the demand growth is. I think over the next 6-9 months, probably we'll see some dealers restocking happening also, which will boost demand. So that's like, the overall macro scenario for chemicals. Secondly, the stocks have done badly. So they're not very, very cheap at the moment, but they've been one major underperforming sector. So given that there are companies which now on a valuation basis are starting to look good, we are looking at some companies where new capacities have come up, and basically there's a volume growth which is there. The market is able to absorb the volume growth today because, the demand environment is picking up. So just the higher utilization of the existing assets will lead to higher ROE, higher margins, and, higher profit growth. So that's what we are counting on. Now, this is, since we were talking about tariffs, this is one segment which is vulnerable to US tariffs, because, one is like anybody who exports to US has a problem. But even if, let's say, China is exporting to US and they stop exporting, they may start dumping all over the other parts of the world. And so, chemicals is something which we are a little worried about on the tariff environment. And that's the reason we've been nibbling at the sector at the moment, but maybe not taking a very big position on it.
So your big overweights are pharma right now and?
Yeah, pharma and financials. So as you know, for the last 6-9 months, we've been talking a lot of the financials and the banks, and that remains one of our biggest overweights.
What about retail, Jyoti? Because a lot of these companies like Vishal Mega Mart, D-Mart, numbers for Vishal Megamart at least were on the good side, and you're seeing that in the stock reaction as well today. But as a domestic oriented sector, what would your analysis be on this retail hyper-local market space?
So, retail as such, we actually don't have exposure in retail as such. And most of it is because we are very, very fussy on valuations. So, our whole CU's philosophy is we like to buy stuff which is very undervalued. And most of the time we want it as underperforming and, under-owned type of sector. So retail doesn't fit in it because most of the time we grapple with valuations in the segment. And we find the valuation very expensive. So we generally stay away from it. There are some other ways we play consumer, which we find which much cheaper, at least, or not very cheap, but much cheaper than what the retail space is about.
Okay, just one final quick answer from you, Jyoti. You've done a lot of analysis of the correction seen in small cap indices. And this time also, we've seen the small cap index correct more than 20% from its record high levels. So tell us, what does history tell us about the way forward?
Yeah, Rima, so, history tells us that you should buy the dip. And most of the time, even today, when we look at it, we are like small cap is looking expensive, probably not make money. But, the index has been there for 21 years. The median correction in the small cap index is 23%. And the median recovery a year later is close to 40%. So essentially, what you have is that, the index goes back to the peak in whatever 12 to 15 months after the correction. And so, somewhere you end up thinking that probably big money can be made if you really bought these dips. You don't know exactly which is the bottom of the cycle. But at some point, if we start to get earnings, and get a little better, then we'll probably start seeing small cap starting to do well. A year later, we would look back and think this was like a big buying opportunity.
Indeed. Jyoti, thank you so much for sparing time and joining us this morning with your views on the markets and on specific sectors as well. Take a short break, but before we do that, here's some good news. Network 18 has beaten Times Internet to become the #1 publisher on ComScore. News 18 races past the Times of India to become the #1 news brand in the country. And that's not all. At the social plus on platform leadership network level, Network 18 is the runaway leader as per the social MMX ComScore report for March 2025 with 315 million unique views, which is 55% more than the nearest competitor, Times Internet, at 202 million. News 18 has also raced ahead of Times of India in terms of social plus MMX cumulative reach. News18.com overall has clocked 251 million unique views to beat the Times of India overall with 183 million unique views as per the ComScore report for March 2025. Now, as per the ComScore social media matrix report, Network 18 is 2 times bigger than the nearest competitor with a 54% reach within the 389 million overall social population. And speaking about Indian languages, in terms of social plus MMX cumulative reach, News 18 Indian languages is the leader in the category with 182 million unique views as per the ComScore report for March of 2025.
Welcome back. Let's talk about the big earnings expected today. Vedanta is right on top of that list, and Nigel is now giving us the key expectations.
Well, that's right. Vedanta will be coming out with its set of numbers and we'll be speaking to the management as well. More than the numbers, the management commentary is something that we'll be tracking very, very closely. To run you through the big consolidated numbers, which include Hindustan Zinc, and those numbers we already have, and that's already in the price. Well, the revenue should jump up by close to around 10%. On a year-on-year basis, the EBITDA number as well will look quite good. There will be some margin expansion that we're working with. And profit number, remember, it's all over the place because Vedanta has a couple of one-offs below the operating performance. But the operating performance is something that we'll be tracking. So the higher volumes, both in Hindustan Zinc as well as in the aluminium business, that's what's going to aid the top line growth out there. The power business, well, it will be impacted by lower generation, but that's known. And from the steel business, we like to see some kind of improvement, particularly on a sequential basis. On a sequential basis, though, we'll have the margins that will contract a little bit. And that's because they source some part of their alumina requirement from the third party. And alumina prices did move up. Remember, as of now, they're much lower. But as of the past quarter, alumina prices were higher, which will increase the cost of production, which in turn will hurt the margins on a consolidated basis. The key numbers you need to track is the aluminium, oil, as well as the international zinc business. And all those three are up for you in the screen because Hindustan Zinc is in the price. A rough EBITDA number. You have brokerages like Philip, like Kotak that have given estimates. So that's why we have got those numbers up. That's the prime importance that you're looking at. Besides the numbers, as I said, we'll be looking forward to the timelines with regard to the demerger. The street is running out of patience because earlier it was supposed to take place in the first quarter of the new fiscal. Now they've guided for the second quarter, so we'll have to wait by on that. How is the promoter on the debt front, and what is the debt reduction plans as well? Some kind of guidance for the remainder of this year. So that commentary will be monitored as well as the numbers. Back to you.
Okay, thank you very much for that. And IOC is the next one that we'll be looking at. Remember, BPCL was a positive surprise. The stock is holding up. There was a refining beat. What will IOC show up? Sudarshan is here with the expectations.
So our estimates suggest a mixed set of earnings, but as you have said that BPCL has thrown a positive surprise, especially led by refining. And if that is the case, one company that is likely to be benefited the most on an improvement in refining is IOC. So we'll have to see what exactly numbers that IOC comes out with. So as far as estimates are concerned, profit is seen slipping 17%. Revenue may be flat and can come at rupees 1.91 lakh crore. The numbers that matter the most, first one is EBITDA. That might improve by 10%, come around rupees 7,800 crore, and margin too can improve and can come at 4.1% versus 3.7% last quarter. As far as GRM, that is gross refining margin, is concerned, it's likely to be in the range of $4.50 to $6.50 per barrel. And last quarter, the company had reported GRM of $2.90. Crude throughput also may increase by 2%. While marketing sales were down in the last quarter, it was at 24.2 million tons against 24.8 million tons. So what exactly we would be watching in the commentary? What does company say on the volume front? And if company has heard anything related to LPG compensation. If you remember, it's the one company which is the highest exposure as far as LPG compensation is concerned. But on the earnings front, after BPCL's strong set of earnings led by refining, the expectation of an improved earnings from IOC has increased.
Indeed, we'll watch out for improved earnings potentially from Indian Oil Corporation after the strong performance that BPCL has delivered. And it's showing up on the price as well. BPCL is among the few that's doing well for itself in today's trading session, and among the stocks, among the earnings reactions, of course. And RR Kabul now has moved to the high point of the day, 6.5% higher on the stock. Although BPCL has come off the highs of the day, but RR Kabul has moved to the highs of the day after opening lower, 6.5% higher. IGL too has moved to the highs of the day, 5.5% higher there as well. Real estate as a pack, as Rhea just mentioned earlier in the show, Godrej Properties is up 4.5%, Macrotech is up 4.5%, and they are doing well for themselves in today's session. Not to forget Sobha as well, that too is trading with gains of around 2.5%. Take a short break, but a small programming note for our viewers. CNBC-TV18 and HSBC India are back with Season 2 of the SME Champion Awards. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact, and are shaping the future. Nominations are now open. You can scan the QR code and submit your entry for the SME Champion Awards Season 2.
In 6 years, to go from starting from scratch to being able to take this business global, I mean, it's a turbocharged journey.
The first US thought came to us back in 2019 when Trump 1.0 and there was 25% tariffs on China. Okay, now with this 25% tariff, can India compete with China? Because we have this 25% delta. Started with like one person spending like full time into that market, talking to a bunch of customers. The second wave of COVID is when we experienced acceleration.
We're now at Trump 2.0.
Yeah.
Tariffs are playing havoc at this point in time. How do you read the latest set of developments in the US?
These kind of opportunities like tariffs, etc., they really allow you to shortcut your sales cycle. So what you would have otherwise achieved in 1 to 2 years, you're able to achieve it in 1 to 2 quarters. I would say in 3 to 4 years from now, these things should be good for India and by extension us.
Welcome back. Now, according to a first-of-its-kind survey done by the Ministry of Statistics, private sector capex is likely to witness a 25% lower growth in the current financial year. Sapna is joining in with more details on this. Sapna.
Absolutely. This is the first of its kind done by the Ministry of Statistics, and basically the sample size was pretty large, over 5,300 odd private sector corporates. And mind you, these are the large corporates with a sizable net worth and a sizable capex plans for their own individual sectors. But what the survey throws up is the fact that as far as the intentions of capex are concerned, for the current financial year, there is likely to be a 25% drop. There is already a drop. That's what the survey shows in terms of the corporate sector intentions for capex for the current financial year. And the numbers are something like this: around 4.88 lakh crore is what they're planning to invest. The number was much higher than the 6 lakh crore in FY25. So that's one big indicator. More importantly, out of those 5,380 odd sample size, 43% of the corporates do not have any capex plans or intentions as of now for FY26. Now, that's a big number that we're talking about. And as I just said, these are not small ticket or small time companies. These are all, net worth heavy companies. So that's a big number to look at. And what are those sectors where you may see some kind of capex not coming in? Basically mining and quarrying, electricity supply, gas, air conditioning supplies, then retail and wholesale trade, repairs of motor vehicles and motorcycles, these sectors. However, on the other hand, if you look at the sectors, so like three of them: education, health, and manufacturing, most important. Here, it's intended by the corporate sector that they plan to step up the investments quite a bit, as much as by 50% year on year. So, there is a bit of a balancing act, but the fact remains, if it's 25% lower, the intention, then that's a number to watch out for. And 43% of the respondents are saying they have no capex plans in FY26. This is somewhat that ties up what Finance Ministry has said, that we need to watch out for the global development uncertainty, because that may actually impact the capex plans for India in the current financial year.
All right, Sapna, thank you so much for joining in with that update. By the way, Varun Beverages numbers were flashing on your screen just a few minutes ago. We'll take that and more forward on Halftime Report. But from Rima, me and the team that put the show together, it's a wrap on Trading Hour. Thank you so much for watching.